Welcome to the Deep Dive. Today we're taking a close look at VA Tech WABAG Limited. WABAG, big Indian multinational in water tech. We've got two main things on the agenda. Their latest financial results for the first half of fiscal 25-26 and some really crucial changes to how they actually announce their big wins.
That's right. So the mission for you today really is twofold. First, we want to get a real feel for WABAG's financial health. They've got this consistent cash position, a good growth story. We need to understand that. And second, we're going to unpack how they now officially handle telling the market about major new business. It sounds simple, but it's actually, well, surprisingly nuanced.
Okay, let's get into it then. Starting with the numbers. The financials for the first half ending September 30th, 2025. We're looking year over year, right? Comparing H1 this year to H1 last year. What's the big picture?
The big picture is definitely positive growth, especially on the profit side. If you look at the consolidated results, revenue from operations hit about ours, $15,685 million for the half year. But the number that really stands out is the consolidated profit after tax, the PAT. That came in at ours, $1,506 million.
Okay.
And that's a solid 20% increase compared to the same period last year, up from about ours, $1,251 million.
20% profit growth year on year.
Yeah.
That's pretty significant, especially in an industry like this that needs a lot of capital, right?
It really is. And it seems sustainable, too. It's not just one lucky break. The consolidated EBITDA, that's earnings before interest, taxes, depreciation, and amortization, kind of a measure of operating efficiency, or that was $2,161 million. That's up 17% year over year.
So the operational efficiency is improving alongside the profit.
Exactly. It suggests they're getting better at, managing projects, controlling costs. It's not just a revenue story. And you see it in their earnings per share, too. The consolidated EPS for the half year was Rs 24.21, which is quite a jump from Rs 20.20 last year. So shareholders are seeing direct value from this.
And importantly, this isn't just being driven by overseas operations masking something weaker at home, is it? The standalone results, the core Indian business, look strong too.
They do, absolutely. That's a key point. The standalone PAT, just the Indian entity, grew by 21% year over year. It reached ours $1,312 million.
Right.
So the foundation, the home market business, is really solid. It's driving growth on its own.
Which gives them that platform to operate globally. How balanced is that global footprint now?
It's pretty well balanced, actually. Looking at the segment reporting for this half year, India brought in about ours $8,229 million in revenue.
Okay.
And the rest of the world segment contributed ours $7,468 million. So it's, almost a 50-50 split.
Shows they can manage complex projects pretty much anywhere.
Yeah, definitely demonstrates that multinational capability.
Okay, let's shift gears a bit, because this next part is, I think, where WABAG really starts to look different. The financial resilience, the cash flow story.
Yes, this is arguably the most compelling part of their current picture, their discipline around cash. They reported a gross cash position of nearly ours $8 billion, ours $7,979 million to be precise.
Wow.
And the net cash position, so after accounting for debt, stood at ours $5,614 million.
And that net cash figure isn't just a one-time thing. There's a trend here.
A very strong trend. This marks the 11th consecutive quarter that WABAG has been net cash positive.
11 quarters, almost 3 years.
Exactly. And think about their sector water technology infrastructure projects, often plagued by long payment cycles, especially with government contracts.
Right. Being net cash positive for that long is unusual.
It highlights really exceptional financial management, discipline in getting PID, managing working capital. It's impressive.
They're digging a bit deeper. That net cash position is even stronger if you exclude the HAM projects, the hybrid annuity model ones, right?
Yes, that's a good point. Excluding HAM, the net cash was even higher at ours, $6,753 million.
So their core operations are generating significant cash independent of those specific project financing structures.
Precisely. It means they're not relying on project debt just to keep the lights on. That kind of liquidity gives them flexibility to bid competitively, invest strategically.
Which brings us to the pipeline. That financial stability must help them secure future work. What's the order book looking like?
It's looking very robust. The total order book, and this includes framework contracts, is sitting at around ours $160 billion.
160 billion rupees. That's substantial visibility for future revenue.
It is multi-year visibility. And importantly, they're replenishing it well. The order intake just for this half-year period was about Rs 34 billion.
Okay, so a healthy pace of new wins.
A strong pace, yes. Though, of course, with a backlog that large, the pressure's always on to keep winning new deals to maintain that momentum.
Let's talk about where some of those new deals are coming from. The chairman, Mr. Rej Midal, specifically mentioned a strategic push into something called future energy solutions. What's that about?
Well, it seems like a smart move to diversify, leveraging their core skills, but applying them to, higher growth, possibly higher margin areas. It's about moving beyond just traditional municipal water.
Okay, so applying their water and waste treatment expertise to new industries.
Exactly. And they highlighted two specific breakthrough orders in this new segment.
Tell us about the first one, the industrial project.
Right. The first one is for Renusis Solar. They're building a solar cell manufacturing facility in Hyderabad. WABAG is providing some pretty specialized systems there. We're talking ultra-pure water, or UPW, an effluent treatment plant, ETP, and crucially, a zero liquid discharge system, ZLD.
Ultra-pure water. That sounds very high-tech. Why is that significant?
It really is. UPW is critical for manufacturing things like solar cells or computer chips. Even the tiniest impurity in the water can ruin the product. So being able to deliver that reliably shows a high level of technical capability.
And the zero liquid discharge part.
That means they treat all the wastewater from the plant so it can be reused, nothing gets discharged, it ticks all the sustainability boxes, and likely commands a better margin than standard treatment jobs.
Okay, so high-tech industrial water solutions. What about the second breakthrough order? That one sounds different.
Very different. The second one is a compressed biogas production project. This is in Uttar Pradesh. And the structure is interesting, too. It's a build, operate, transfer, or BOT project under a public-private partnership, PPP.
Ah, BOT. So WABAG builds it, runs it for a set period, and then hands it over.
Exactly. And it's a long period. The concession period is 15 years.
15 years. So that locks in revenue for a very long time.
Precisely. It's not just building something and moving on. They become a long-term infrastructure operator and partner.
And it's in biogas. So green energy.
Right. They're taking their expertise in handling waste sludge, which is, their bread and butter in wastewater treatment, and applying it to produce energy. It positions them right in that growing green energy infrastructure space.
Okay, so you've got strong financials, consistent cash flow, a big order book, and strategic moves into new areas like high-tech industrial water and green energy. But winning these big, sometimes complex contracts raises a question. How do you tell the market about them effectively, especially without giving away too much to competitors?
And that leads us perfectly into the second major piece, the governance changes. Specifically, the amendments to their code for disclosing unpublished price-sensitive information, or UPSI, this took effect on November 7th, 2025.
Right, the new disclosure rules. What was the main goal here? Just ticking regulatory boxes or something more strategic?
It seems like both, really. The stated objective is clear. Uniformity, transparency, fairness in disclosures, making sure everyone gets the same material information at the same time. But the way they're achieving that involves a significant strategic choice, especially around new orders. They had to define when an order is big enough to require an announcement.
Okay, so what are the new thresholds? When must they announce a new contract win?
They've set clear value minimums, and they depend on where the client is. For orders from overseas parties, the threshold is USD 10 million. If it's that value or more, it has to be disclosed.
10 million US dollars.
Right.
All right. And for Indian clients?
For Indian parties, the bar is higher, INR 100 crore. So any domestic order worth 100 crore rupees or more triggers a mandatory disclosure.
100 crore. That's about, 12 million US dollars roughly? So a significant size for mandatory domestic announcements gives analysts a clear line.
It does. But, and this is the really crucial change, the aha moment, the new policy explicitly says the exact contract value, the specific rupee or dollar amount, will not be disclosed in these announcements.
Ah. So they tell you they won something significant, but not precisely how significant in monetary terms.
Exactly. To protect their competitive position, presumably on pricing and margins for future bids, they're shifting to standardized descriptive value bands.
Instead of saying, we won a $14.3 million contract, they'll say, what?
They'll say they won a contract in the medium band, or large, or major, or mega, and they have to make this announcement using the correct band within 24 hours of receiving the letter of award or the contract.
Okay, so transparency on the win itself and its general size within a day, but confidentiality on the precise price tag.
That's the trade-off they've made. And it's worth noting there's also a small category, anything up to 100 crore INR or 10 million USD. Those don't require mandatory disclosure under this specific code, although the company might choose to announce them anyway, perhaps in aggregate.
Let's make sure we get those bands clear for you, the listener, because this is the new language WABAG will be using. What's the first mandatory band?
The mandatory disclosures start with medium. That covers orders valued from 100 crore rupees up to 250 crore rupees, or in dollar terms, roughly $10 million up to $30 million USD.
Okay, 100 to 250 crore is medium. What's next?
Next up is large. That's for contracts valued between 250 crore and 600 crore INR. The equivalent is about 30 million to 75 million USD.
Large, 250 to 600 crore. Then it gets really big.
Right. Then you have the major category. This spans 600 crore up to 1,000 crore INR. That's roughly $75 million to 150 million USD.
Major, 600 crore to 1,000 crore, and the top tier.
The biggest ones are mega. That's anything above 1,000 crore rupees or above 150 million US dollars. These are the really transformative deals.
So mega is over 1,000 crore or $150 million.
Got it.
Got it. It creates informed ambiguity, maybe. You know it's big, you know roughly how big, but not the exact number.
That seems to be precisely the goal. Timely information on significant wins, but protecting sensitive pricing details.
And this governance update wasn't just about external disclosure, right? It also touched on internal controls, preventing leaks.
Yes, it did. It tightened up the definition of legitimate purpose for sharing UPSI internally or with necessary third parties.
So defining who needs to know sensitive info, like auditors, legal teams, collaborators as part of normal business, and why.
Exactly. It puts guardrails around sharing that sensitive unpublished information.
And if information does leak improperly,
They formally established an inquiry committee. Its specific job is to investigate any actual or even suspected leaks of UPSI.
shows they're taking information security and regulatory compliance seriously.
It certainly sends that message, yes. It adds teeth to the policy.
Okay, let's try and pull all these threads together for you. We started with WABAG's strong first half performance. That 20% jump in profit after tax year over year really stands out.
Yeah. Driven by solid execution and efficiency gains, not just higher revenue, and underpinned by that incredible financial discipline, 11 straight quarters being net cash positive. That's a core strength.
Then we saw their strategic moves, diversifying into future energy solutions, winning complex projects like the ultra-pure water system for Renusa Solar.
And that long-term 15-year biogas BOT project, showing they can leverage their core skills into new, potentially high-growth areas.
And finally, the big structural shift in communication. The new disclosure policy for orders. No more exact values.
Right. Instead, we get mandatory, timely announcements within 24 hours, but using those value bands. Medium, large, major, mega. Transparency on the win, confidentiality on the price.
So putting it all together, what does this mean for you, the listener, trying to follow WABAG from here on out?
Well, the game changes a bit for analysts, I think. You can't just add up the announced contract values anymore to track the order book precisely. You now have to make assumptions. When they announce a large order, do you model it at the low end, the high end, the midpoint of that 250 to 600 crore range? It introduces estimation into the process.
Yeah, that creates a new challenge, doesn't it? It bridges that gap between the company needing confidentiality and the market needing information, but it puts the onus on the analyst to interpret.
Exactly. It requires building a track record. Does WABAG tend to win contracts near the top or bottom of these announced bands? Only time and further results will tell.
Which leaves us with the final thought, perhaps. How accurately can the market price the future value embedded in WABAG's order book when all the new, significant inputs are ranges, not precise figures? Will the market consistently under or overestimate until a clear pattern emerges? That's definitely something for you to think about as you watch WABAG navigate this new approach.